where heads of state, sports, entertainment, and political celebrities meet. You're listening to Armstrong Williams.
Welcome back to the Armstrong Williams Show. Thank you so much for joining us. Mike and Judith, what do you have to say to that?
Okay, as I had mentioned, it depends on what side of your trade you're on. Listen, you've got in today's world, a lot of people fancy themselves to be their own analysts, and so they make their own decisions. If you have a loss, you've got a loss. From the standpoint of the directors and the initial investors in Facebook, they had a very successful IPO. Peter Thiel, I think the numbers are something like he had originally invested $500,000. He's still selling at these low prices, and he's walking away with $1 billion. Very successful IPO. The mutual funds that bought it, thinking they were going to get that pop in price because Facebook had mind share, meaning supposedly they have 1 billion active users, which has always been under question, they didn't get it. So now they're underwater. Get over it, pair it with a gain, take the losses, and move on. We're a capitalistic society. What's the right price for Facebook? The right price is when it stops going down and starts going back up. That's when you buy it. And Facebook, similar to the conversation we were having about Apple when I brought up Lucent Technologies, I just bring out some names that people should look and reflect upon, like CompuServe, MySpace, InfoSpace, and even Yahoo's struggling these days, but is working to have a turnaround. So just because it has, just because you have an account with them, and remember, this is an important thing, because in Facebook, if you belong to Facebook, you don't pay for anything. It's all free.
Right.
You know what I'm saying?
Right.
And that's what everybody was banking on. Everybody's banking on, the saying goes that if it's free, then you're the product. Okay, but how do you monetize the product? Can Facebook monetize that product? And they're having problems doing that. And what Wall Street wants Facebook to prove to them is that they can not only predict how much they're going to monetize, but how they're going to grow that monetization.
Well, let me ask you a philosophical question. And Armstrong brought it up tangentially. Long term, if the guy who's there calling the shots, who is the controlling shareholder, is not interested in money, can we, as shareholders of Facebook, end up making money?
Well, let's go back to Apple. Look what happened to Apple when they brought in Scully. He fired Steve Jobs, and it was the best thing that ever happened to Steve Jobs, and Steve Jobs had to come back and save the company. So saying Zuckerberg is the problem is, I think, completely wrong, because anybody in that position, whether you're young or old, works with a team. And it's not a one-man show, and especially not when you got an animal like Facebook. It's about the people you put around you, and you put around good people. It's about whether or not they can tame the bear, the tiger that they've caught by the tail. When Facebook first came out, there was no shortage of public media explaining to the public that it was overpriced. Facebook might go down to $10 a share or $6 a share. There'll be a price that it's the right price for now. And if they can ever get their hands around monetizing the people that are on their platform, they will be a phenomenal company. But the problem is all the hype around it and all the people that had a successful IPO, are just fine with what has happened so far.
Yeah.